Hey everybody, how is it going this Thursday? Well, inflation is continuing to rise, so in this video I want to go over the best performing asset classes in this type of environment. And then after that, I want to show you the best ones that I see setting up right now. Now, if you're new to my channel, I have been trading and investing for over 20 years, and in each video I will show you trades that I see setting up right now. So if that's something that interests you, please consider subscribing so you don't miss any future trading and investing ideas. And also, if you would like to support the channel and become part of our Patreon community and see what we are buying and selling in real time for a measly $10 a month, that link is in the description. Okay, well, before I get into the charts today, I wanted to show you this graphic. I don't know if you guys saw the inflation numbers that came out a few days ago, but they were pretty scary. In fact, they were a lot worse than many were expecting. So I wanted to do a little bit more digging and see if I could find, what asset classes or sectors performed the best in a high inflation environment and a rising inflation environment. And I came across this study, so I wanted to show this to you guys. Take a screenshot of it, or I don't know, let it burn into your memory or something, so you have some a point of reference to use in the future. Of course, past performance is not indicative of future results, or whatever the hell they say, but at least it gives us some kind of frame of reference. And actually, most of this is what I remember. There was a few surprises, but basically what this graph is, it's put out by JP Morgan Asset Management. It was completed at the end of last year, and it's going all the way back to 1988, so the last 33 years or so. And the columns on the left represent a rising inflation environment, and the columns on the right represent a falling inflation environment. And this line in the middle is the median, and they calculated the average inflation to be 2.5%. So I personally think we are above that right now, and inflation is rising, so we are right here. I don't know about you guys, but I'm not so sure that this inflation is going to be transitory. I guess that is up to you to decide for your own investments, but I personally don't think it's going to be. I think it's going to be rising for at least a little while. But anyway, I put out a video a few days ago talking about how I thought emerging markets were setting up to go higher, and this graphic is showing that in a high inflation and a rising inflation environment, that the emerging market equities performed the best. And so that makes me feel a little bit better about the charts that I was looking at, telling me that these emerging markets, some of these funds and some of these stocks, I mean, they've just been in some long bases, and they are just itching to break out. And the longer the base, the bigger the move up. The longer the base, the higher in space, whatever you want to say. But I think they are looking pretty good right now. Now, one thing that did surprise me, I thought that gold would perform better in this environment, and is actually the worst performer, and gold has been slacking lately, and maybe that's why it has been slacking, because it doesn't do good in this environment. Maybe my memory is not serving me there. But I do think commodities are going to perform well. Energy in particular. So I think those things are setting up to go higher. I still think gold is going higher. I don't know why. I just think those charts just look like that they are going to break out. I think gold has been lagging because, I think people are flocking to cryptos instead of gold, but I think eventually people are going to come back to gold, because I think gold just going to get, it's going to be so, I guess, undervalued or out of favor for so long that eventually people are going to pile back into it, and then it's probably going to go on a run. But I just wanted to show you guys this chart because I thought it was pretty interesting. So obviously, if I am right and we are in this environment right here, we are going to eventually transition into this right here, where it goes from high inflation, then it starts falling, and emerging market equities are the #1 performer in that environment as well, historically. So if history is right, and emerging markets do break out and we position ourselves in it, they should outperform for quite a while, because chances are, inflation, if it goes high, it's probably going to stay high for a little while, and then when it starts coming down, the emerging market equities are going to outperform. And we have been in this low inflation environment, and I guess you could call it kind of low and kind of falling, and you can certainly see why emerging markets have been underperforming in that environment. So I just want to show you guys this graphic before I got into the charts. It kind of confirms what I'm seeing with those emerging markets and gives us, you know, just some more information, another frame of reference to go by in the future once, you know, these different environments start changing, and then maybe we can be one step ahead of the curve, at least having the odds in our favor by looking into these better performing sectors once, you know, those environments start changing. All right, let's get into these charts. You guys know I love charts, and I can't do a video without at least showing a couple of them. But before I get started, if you can do me a small favor and like the smash button for putting all of this together for you and helping me out with the YouTube algorithm, I would greatly appreciate it. But please remember, I'm not a financial advisor. All of this is just my opinion. I'm just trying to show you the best looking charts I see in the market right now. Please make all of your own trading decisions. Now, with all that being said, this is the EEM, the Emerging Markets ETF. I'm not going to go too in-depth into emerging markets right now. I did a video on them a few days ago. I'll link that at the end of this one if you want to know more about those. I want to get into some other sectors, and I don't want it to drag on too long. But this is the EEM weekly chart, and as we can see, this thing has been in a long base going sideways for over 10 years. I think this thing is just itching to go higher. Now, I do think we are going to get a market correction this year. I don't know how deep it's going to be. I don't know if it's going to be the big one or if it's just going to be one that pulls back, you know, 10, 15, 20% or so, and then bottoms out in a month or two, and then we resume the bull market. I have no idea, but I do think emerging markets are going to outperform most U.S. equities when that does happen, however long it takes, because I think emerging markets are just setting up to go higher, and I want to be a part of it. Definitely, if we get a pullback in the market, I am probably going to be looking for some great emerging market stocks. One of my favorite ones that I've already started buying is Alibaba. We'll take a look at Alibaba's long-term chart. We can see that they are in a beautiful descending wedge formation, and these almost always resolve with a breakout to the upside. Of course, Alibaba is going through all the nonsense with their government, just like all the rest of the Chinese stocks, you know, and they're also going through the regulatory nonsense with our government. So they're getting hit on both fronts. When good growth stocks are getting hit with temporary things, that's when you want to start accumulating them, when it starts driving the stock price down, because eventually they almost always get past it. And I do think that's also going to happen with the Chinese stocks this time. I don't think they want to be delisted from our exchanges, and I do think they're going to comply with their own government. So I think this is going to represent a fantastic buying opportunity in some of these better names in these Chinese stocks. And I think if we look back in a couple years, we're probably going to be wishing we bought some of them. So I've already started buying some Alibaba. If it goes lower, I think I'm going to grab some more. But let me get into some of these other sectors. All right, the first sector I want to get into is oil. This is the USO, which is the oil ETF. It looks like oil is starting to top out a little bit, and I wouldn't be a bit surprised if it does go lower. But I do think since oil does well in inflationary environments, plus since there is a supply-demand dynamic going on right now where we cannot keep up with demand, the economies are starting to open up and they're starting to grow. And we already cannot keep up with demand right now, and I don't think it's going to get any better going forward. And we got a little bit of a double top going on right now with the oil chart, and we got divergences all over the place. Let's see if I can draw this. Got a divergence right here. We got price going higher, and we got the MACD going lower. We had one right back here, which resulted in a temporary down move. You can see a little bit of a negative divergence right here, which resulted with this price going down at least 10% or so. But we also have this massive divergence going on right here. See, price went higher, and the MACD made a lower high. So I think conditions are setting up for oil. I think oil has run quite a ways since last October. It's due for a decent sized pullback, and I think this is going to represent a pretty good buying opportunity, so I plan on adding some more energy, particularly oil, to my portfolio if we do get that pullback. One of the stocks that are starting to tip over is ExxonMobil. You can see ExxonMobil is making a rising wedge and looks like it's breaking down out of it the last couple of days or so. Yep. So the ExxonMobil chart is definitely looking bearish. Should be some more follow through to the downside. The next area of support I see for ExxonMobil is probably right around that 200 period simple moving average. Right around $50 or so. So that represents almost a 20% decline from here. I don't know if it's going to fall that far, but that's the strongest area I see of support. Actually, there is some right here as well, so it might only make it down to this level right around 55 or so. So I definitely think that ExxonMobil is probably going to continue lower until it hits one of these support areas. And that might be a decent time to pick up some ExxonMobil. If you are looking to, and if you haven't picked up enough energy in your portfolio, I think this is going to represent a decent buying opportunity if you want to add some. But let's get into the next one. Let's get into Chevron. Look at Chevron Corporation. We can see we got a nice rounded top formation starting to form. So this one definitely looks like it's going lower as well. Should get some lower prices. And this is a nice support area right here, also coinciding with the 200 period simple moving average. So wouldn't surprise me one bit if Chevron pulls back to about the $95 area, and wouldn't surprise me if they bounce from there. So that looks like that might be a decent area to pick up some Chevron if you are wanting to do so. Next one is British Petroleum, or BP, I don't know. I think they used to be British Petroleum and they changed their name. Maybe Beyond Petroleum now, I can't remember what they're called, but they are starting to make a rounding top as well with that rising wedge formation. So a lot of these oil stocks are starting to break down, which that's okay. That's an opportunity as long as conditions going forward still look bullish. You got to take advantage of these temporary, or at least hopefully temporary pullbacks. You never know exactly where the market's going to go. But if conditions are bullish and everything else is looking good, you got to take advantage of those pullbacks. So BP is looking like it could be pulling back to that 200 period simple moving average as well, and that also coincides with support. You'd be surprised how often that happens. So I wouldn't be surprised if BP comes down to about $23 a share. So I'll be looking at all of these once they get close to those levels. Next one I want to go over is SU, which is Suncor Energy. This one is rolling over hard, and this one is also coming down to support. I mean, there's just support all over the place in these, and I expect these stocks to catch some support, and I think odds favor that a lot of these are going to be pulling back down towards that 200 period simple moving average. That might be wishful thinking. They might not make it all the way down there, but if they do, I think there should be some decent bounces there. Whether you want to use them as swing trades or to accumulate some of these for your long-term portfolio, I'm going to probably be accumulating them for the long term. I might play one or two as a swing, but I do think these are going to be great times to add some of these stocks. Another one that I want to show you is EC. Let's see, EC is rolling over as well, coming into these support areas and these moving averages. So a lot of these stocks are going to be hitting these moving averages potentially in the next couple of days or so. It might take a week, but I do think they are going to find some support there. But the next sector I want to get into is gold. Now, let me back this out a little bit. Look how gold is starting to make a nice rounded bottom. I mean, I think gold is setting up to go higher. And if you back this chart out, this thing has been going straight up since 2018, but now it is pulling back just very slightly. It's not crashing. It's just pulling back and starting to make that rounded bottom. That's why I'm thinking that gold could outperform in this inflationary environment. I'm going to keep a close eye on it, and I'm probably going to be a little bit skeptical after looking at that graphic, but I don't know. I just think that gold looks like it's setting up to go higher, and we can also see that gold is coming off of this bottom, is bumping its head up against those two major moving averages. So if it gets above the 50 and the 200, I think all signs are going to be go. As long as it can hold above it for a few days or so, I think it's going to be starting that new uptrend, because this looks like the bottom could be in. But looking at the GDX, which is the minor ETF, we can see that this one is lagging just a little bit. It's kind of made that double bottom formation, but it is well below those moving averages and is lagging in the last week or so. But that's not surprising, because gold seems to always lead the GDX, so I wouldn't be surprised if the gold miners get a move up in the next week or so, because this one usually follows gold. And actually, let's go to the weekly chart before I jump into some of those individual miners. But we can see that GDX definitely looks like it's making a rounded bottom formation, just like the GLD. And if we go back to the GLD, we can see that's a very bullish formation on the weekly chart. I mean, this looks like an inverted head and shoulders formation. So that's just one of the many reasons why I think gold is going to outperform. But the first gold stock I want to show you is BTG. Let me go back to the daily charts. Looking at BTG, it's coming down towards that long-term support. I've had this on the chart for quite a while, and it threatened breaking it, but now it looks like it's bouncing back up, and this support could hold. So these things are pulling in to long-term support and could be starting new uptrends. I'm going to be keeping a sharp eye on these gold stocks, because it's my opinion that I think they are going to be starting an uptrend, but you never want to jump in until it's confirmed. Next one I want to show you is NGD. See, NGD never came down to that long-term support. It's holding above it and continuing to move sideways. This one is only a $1.72 stock, but is one of the better-looking charts out there, especially for the lower-price ones. Next one I want to show you is IAG. I think IAG is looking pretty good, coming into that long-term support and holding. So I think conditions are setting up for these stocks to definitely move higher. And actually, if you take a look at all of this price action, it is a pretty long base on its own, going all the way back to 2018. So, I mean, a lot of these stocks have just been in long bases. But another one I want to show you is KHC. Or nope, not that one. It is KGC. That's it. There we go. This one is also pulling in to long-term support, and I'm betting that this is probably going to hold, especially you can see how the MACD is starting to turn positive as this is going sideways. So I'm bullish on a KGC as well, and just waiting for that breakout before I add it. If it's got to break out of this consolidation right here before I jump into it, it's got to prove that it's going to move higher, and so does gold. I'm not jumping into any of these gold ones just yet, but I am locked and loaded, because I think these ones are going to do pretty good going forward. Let's take a look at GFI. GFI is pretty much doing the same thing. It's right there at long-term support, and it is holding, and it is starting to break above that consolidation right there. So GFI is one step ahead of KGC. So I just think a lot of these are looking good. And actually, let's get into some of the higher price ones before I get out of here. If we look at gold, which of course is Warren Buffett's favorite, this one is not my most favorite of the larger priced ones, the larger cap ones. And I don't know. I'm not going to argue with Warren. He's 10 times smarter than me, but I do think that they will probably turn around and head higher. One that I am more interested in is Newmont. I think Newmont is looking fantastic. It looked like it was going to break out a couple of months ago, and it pulled right back into this long consolidation. It's been consolidating for well over a year. I think when this one does break out, it's probably going to be a pretty decent move. And Newmont, I think, pays a dividend of about 3.5 or so. That's a pretty decent dividend to be holding as your stock potentially moves higher. And the last one I want to show you is Royal Gold. Excuse me. Royal Gold is making a beautiful cup and handle formation, or I should say a rounded bottom formation, and it looks like it could be breaking out eventually above this 50-period simple moving average. So I think Royal Gold is looking good. Oh, and one more is WPM. Don't want to leave without that one. That one making a very similar pattern as well. So as you can see, a lot of these gold stocks are making very bullish formations. So I think gold is setting up to go higher. I think these gold stocks are setting up to go higher. And I think this pullback in oil looks like it is a very viable pullback if you want to add some energy to your portfolio. Okay everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care everybody.